Hello, this is Jordan. This video is being recorded on the very late evening of Sunday, October 2nd, 2022. You will most likely be watching this on Monday, October 3rd, 2022. Thank you so much for joining me. And in this video, this is not going to be a wrap-up. It's more so going to be a preview of what's potentially coming this week in precious metals, although talking about what happened last week is also quite important. Necessary, I should say. Okay, so what's really interesting to me, and this is a weekly candle chart, we have the S&P at the top, gold in the middle, GDXJ at the bottom, and for the S&P, we have the weekly equivalent to the 40-month moving average, and so that supported the market in June around 3,600 when the market, of course, was quite oversold and due for a bear market rally. Because if we look at a lot of significant market corrections and the six major bear markets, they tend to have this first wave down and they decline around 20%. So that fit the parameters. It was oversold and it rebound. It hit the 40-month moving average almost exactly, and that's where that bottom was. However, at the end of last week, the market closed below the 40-month moving average. And, of course, the weekly equivalent, it closed below that 2 weeks ago. So, yes, last week closed below it again, but on a monthly basis, which is obviously more important because we're focused on the 40-month moving average. What's really significant, I think, or what could be, maybe I'm reading too much into it, but this could be a turning point for precious metals because look at what happened. Gold put in a bullish hammer. Gold had broken down below 1675. It had traded down to the 1620s, closed the week at 1672. So is there a false breakdown there? Yeah, maybe. It's too soon to call it. On Friday, if we would have seen a big move above 1700, that would have given us a lot more probability that, hey, this really could be a false breakdown. Now, there's potential for a rally, but we don't know if it's a real false breakdown yet. However, so stock market was down, I think, 3%. Gold up 1%. GDXJ was up 9%. GDX, I think, was up 7.5%. So really strong week from the stocks. They really they achieved that when we had the market breaking below the 40-month moving average. Now, quick history lesson. Go back and let's look at, we know if you follow my work, you know that I believe breaking below the 40-month moving average is very significant and a signal that you're in a new secular bear market. Let's go back to when that happened at the beginning of the last secular bear markets, the end of 1969. And then also you have 2001. What's really interesting is, go back to the bear market began at the end of 68, the very end of 68. If you look at November 1969, that is when the stock market closed below the 40-month moving average. And then it did it convincingly in December. But after that November closed below the 40-month moving average, 4 weeks later, the Barron's Gold Mining Index, the stocks bottomed. Of course, the gold price was fixed. Now, you go back to 2001, February 2001, was when the S&P closed below the 40-month moving average. Well, if you're looking at a daily chart of gold, it made a double bottom that February and then in April. So if we're looking at history, that's making a strong case that precious metals are really, really close to the bottom. And then you have this action last week, which is really, really interesting. So, we have to keep that in mind. At the same time, the risk of things breaking right now looks to be really picking up. You have the S&P 3585. It broke below the June low. And, there's support levels at 3,500, 3,250. So if the market dumps down to that 3,250, which is a really, really strong target, there's lots of support there. If that happens, we have a few more things breaking. That could potentially interrupt, this fledgling rally in precious metals. And maybe you get some forced selling. Although I would think it's not going to be like 2008 because 2008, precious metals had 7 years of huge gains. That's not the case this time around. But, those are things we have to think about and consider. So here's the daily chart of gold and silver. And, silver, obviously, it's been holding up better. Wasn't as strong as gold last week. The net spec position in gold as of Tuesday, and that's when gold made its low, was 13.6%. I would be way more optimistic in the short term if that had fallen to the single digits. So, and again, if you look at the 2018 low, the 2016 low, the two most recent significant lows in the gold market, net spec position was basically around zero. So, I mean, that you also have to consider that. So, I mean, technically, we'll have to see. I mean, if gold can, I mean, it's too soon to say that, that there's a failed breakdown or a false breakdown. But, looking at the stocks, things are positive. Looking at the history with the market coming down, things are positive. But looking at the short term, we'll see if gold can rally back above 1,700. It looks like there is some resistance there, so that's probably going to be initial resistance. Silver, I think it's just less of a focus right now for me, given that, gold is really the macro driver. And if we see the stock market plunge lower, if we see commodities weaken, gold is going to outperform silver. But, because of all the shorting in silver and the net spec position in recent weeks was basically at, one of its most bullish levels ever, then perhaps there isn't that much selling pressure in silver. But, looking at silver, if gold's going to rally to 1,700 or even above it, we'd like to see silver rally up to that resistance at 20 or 21. Now, looking at the stocks, so they've been strong for the last 3 or 4 days. And so look at the thick red lines here. Those are potential rally targets if we're at the start of a sustained rebound. Those are potential rally targets for GDXJ. I mean, rallied up to 29.5. It's interesting because, I forgot to mention this in my premium service, but you can see if you look at the chart, GDX traded, I believe it traded in the high 24s, just below 25, and it almost rallied up to 30. So, that's almost from the low, I think on Tuesday to the end of the week. That was almost a 20% rebound. So these things can move really quick. And if this strength that we've seen in the last week or so, if there's going to be more buying behind it and it's not going to be derailed by, a broader market sell-off, then these thick red lines are potential upside targets. So there it is, guys. It's going to be really interesting the next couple weeks. So I don't mean to be non-committal on a lot of things, but things are looking better for precious metals right now, but we don't know how the stock market's going to fare and all of that and how it might affect precious metals. But I am feeling more confident that in the next month or two, precious metals are in position to really emerge and have a real significant rebound. Let me know what you think in the comments. Thank you so much, and I'll see you guys again in the next video.